I'm going to get to the names now. You're not looking like way out on the risk curve for some of these names. You're not buying what you think are super high beta names. I mean, McDonald's, American Express, Caterpillar, Meta, Apple.
Well, you could say Apple maybe.
Well, yeah, lately for sure. But you know what I mean. Generally speaking, you're looking at some of the best companies in the world, blue chip stocks that you believe are maybe somewhat of ports in this crazy market storm.
Well, with the exception of McDonald's, each one of those names was down 30% in about a month. So even more than the broader markets. Now, can they go down further? Absolutely. We don't call bottoms. I'm not here to predict anything that's going to happen over the short term. But a 30% drawdown on Meta, 30% drawdown on Caterpillar. What we're seeing with McDonald's, a little bit different story, but maybe a trade down for the consumer. Caterpillar obviously is going to be subject to global issues. And I think we can get to Apple separately.
Let's get to Apple now. I mean, because that's one of the most hotly debated stocks within this market. It's down 26% off of its 52-week high. And let me set the stage as well, because literally right when I sat down on this desk, moments before our program, our senior producer sent me a note that Jim Cramer has just put out that says, quote, I'm wavering on, quote unquote, own, don't trade Apple, that it's now harder to defend Apple stock in the trade war. That's significant coming from somebody like Jim, who has made the case for literally as long as I can remember, and I have these words in my head, own, don't trade Apple, because he says it so often. But this is different. The game's different. The goalposts have moved. Should your thinking move like Jim's?
My thinking's not going to change or move like Jim's, but it's nice to see that there's some more opportunities to trade it. In the past 13 years, I've sold out of Apple in its entirety 11 times. I trade Apple. I don't own Apple. Most recently in December, we sold it at 247.5. Coming in back on Tuesday at 177, that's attractive for us. On Wednesday on the pop, I wrote a 215 call. Short, it's going to expire the first week of May. Brought in $1.30 on it. We trade Apple like crazy, and I think Jim's point is completely spot on. This game has changed. What's happening with tariffs could be devastating, and I'll give you a worst-case scenario because we modeled it. What if Apple earns $5 a share? Because that's a real possibility. And what if you bring the multiple down to 25? $125 stock for Apple. We're paying $177 for it. It's probably trading in the 190s right now. We're not buying the whole position. We'll buy it on the way down, but just recognizing that it could go lower, you have to be careful in these markets, and you can't get too tricky.
If we had room at the desk, I would say, Jim Cramer, come down here right now and talk about this. And if he wants to stand at the end of the desk and have a conversation with us, he's still more than welcome to show up at our table. And I'll leave that to him. You bought more Apple today?
Yeah, actually yesterday, but it doesn't matter. It's in the context of this. Most great long-term investors will tell you that most of the time you're trying to buy great companies at okay prices, good prices. And that is, that's a Warren Buffettism, that's a Howard Marksism, and I think it's a Kevin Simpsonism, and probably Brenda and myself as well. But you now have this opportunity to buy great companies, and I submit to you that Apple is still great at very good prices. I'm not going to say great prices. It's still mid-20s. I get it. But this is an opportunity in the downturn that we've seen to upgrade your portfolio because everything's got smeistered here. So why not trade out of some of the more speculative things into the companies that are likely to thrive on the other side of any downturn that happens? And we can discuss whether Apple will thrive on the other side of this, given that it's in the crosshairs of the China trade war. My opinion is, yes, it will. I don't know how the trade war is going to end, and like Kevin, I'm not calling a bottom either. This thing could obviously go lower. But I look at the prices compared to where they were just 4 or 5 months ago for one of the best companies in the world, and I am absolutely buying. It's not the only thing I'm buying, by the way, because a lot of times when we talk about great prices or great companies, we talk about tech. I've been buying Citigroup, as you know, Scott. Also bought Wabtec today, great industrial in my opinion. Bought some AstraZeneca, and I think this is interesting because pharmaceutical tariffs are on the come. there is still some bad news to come. And yet I look at companies like AstraZeneca or AbbVie or Vertex and I say, wait a second, these are companies that are doing great things and they've been repriced for maybe not all, but a lot of the danger in the market right now.
Brenda, you own Apple. You own a lot of these tech names that are substantially off their 52-week highs. Are you in the mindset like both Kevin and Jim that now's the time to actually put some of this money to work?
I think it makes sense to add a little bit, and as we talked about a little bit yesterday, our strategy is not to add all at once, but to add incrementally during environments like this, because we don't know where the bottom's going to be, but we can look out from a longer-term perspective and say, is this an attractive entry point for a one-year time horizon or more? And I would say yes. There's still a lot of uncertainty, but I do think that now is a moment where you can add.